Good morning, good afternoon, good evening, everybody. Welcome to the Talent Market 30. My name is Joost Heins, and I head up the intelligence function for Randstad Enterprise. In less than 30 minutes, we're going to take you through the labor market update of the last 60 days. And as last time, if you have any questions, please pop them in the Q&A box. We should have enough time to address a couple of questions. So really looking forward to that. This is the second time that we're organizing this. We actually have doubled your audience. I really appreciated the feedback received after last time. So I'm happy to take you through this month's update. And I'm going to take you through a couple of things. Of course, we're going to give you an overview on what's happening in the labor market across the globe, zooming in on a couple of countries. I also want to give you a little bit of context around two things that are happening right now. One is the founder mode debate that started in Silicon Valley, and I think is an interesting HR debate happening at the moment. And of course, it's hard to escape, and maybe some of you might be fed up with it, but I do want to talk about the US elections, and then specifically on what could be the impact on the labor market as a result of the elections. Then we're going to give you a very small preview of our Global In-Demand Skills Report that we'll be launching in December to give you a little bit of a flavor of what you can expect. And then we're going to dive a little bit deeper into an excellent report from Lightcast, which is called A Storm is Rising. And it goes into the demographics and the labor market expectations following that in the US. But there are a lot of takeaways that are not only focused on the US, but are applicable to a lot of other developing countries that are facing an aging population. And of course, we end with some takeaways and the Q&A and what to look out for the next edition. So first of all, the update on what's happening in the labor market. So we've seen that the labor market has gotten slightly less tight compared to last time. You can see that the dial has moved a little bit in the US and the UK. Yesterday, the JOLTS were announced in the US, where you saw a little bit of a mixed bag of indicators. Job volume, or I should say job ads, has gone down a little bit. Wage growth was still quite strong, and that was also true for the Netherlands especially. And I think this is one of the areas that, as in the HR industry, is something to be very aware of, is that if wage growth continues to be strong also in 2025, especially in kind of like budget season, that's something to be very aware of. Also, other areas you see that job demand is still stabilizing. Last time I talked about the central banks and the rate cuts and the interest rate cuts that we were expecting. These have also happened. And as you can see that inflation has further subsided, you can also see that the rate cuts are expected again to continue. And why is that important for you? Is because there is always a bit of a delay between the rate cuts and therefore further investments, because capital is getting less expensive, further investments, and therefore increase in demand. And usually that delay with rate cuts is about 6 to 9 months. So the impact from these rate cuts that are happening right now, you can probably expect in Q2 next year. And that's where we expect for sure a further tightening of the labor market. Now, by all means, it's not very loose at the moment. Unemployment rates are continuing to be very low, and we definitely see a stabilization when it comes to job ad volume. So yeah, one of those areas that I think it's good to be aware of is your organization ready if there's a further increase in tightness on the labor market? And even if you might not be growing as fast as the company, you might expect more, or you might experience more competition in the labor market when you're hiring, and are you ready for that? So that's a little bit of a feel on what we currently see in the labor market. If we move on to the next slide, I want to go into the US elections. And I need to preface, of course, the US elections with a couple of areas. Unfortunately, in the US, there's not a very clear history of publishing the policies well in advance. Not only not well in advance, but also the depth and breadth of both parties publishing their plans is a bit more limited than in other countries. So it is quite hard to judge on what the real impact will be of one or the other. Also, like I said last time, we shouldn't overestimate what the impact is of a change in administration. Of course, there are different focus areas and they will have an impact, but in general, overall, the impact is relatively limited. And of course, one more caveat before going into the content. This is no voting advice, of course. This is just an indication of what it might look like after the choice is made in less than a week. For a potential Harris administration, there are a couple of areas of focus that we'll expect. The two areas are, in my opinion, the most important. First of all, is a further investment, especially in manufacturing, and then especially in the green sector. So making the U.S. manufacturing greener, and also making the labor market a bit more accessible to other groups as well. For example, with more paid maternity leave, improved childcare, that could improve access to the labor market for women, but also with policies of removing the degree requirements for federal jobs, that could open up access to more federal jobs for everybody, also without a college degree. Then what the impact of that is, we looked at how Moody's has analyzed that, and Moody's expects that there are about 0.6 million more jobs created in a Harris presidency, and also expects the wages to further increase. Now, of course, there are potential challenges, and the main challenge that I want to call out is that Harris is expected to increase taxes, especially on companies, and that might have an impact on the amount of capital investments that are being made, and therefore could have a dampening effect on job demand. If we then move over to Trump, there are two main things he focuses on that might impact the labor market, and probably everybody is aware of that. But of course, that is migration, but also tariffs. So first of all, tariffs. He is expected to introduce tariffs on different areas, but across the board. And if you look at the consensus among economists, that does mean that it could cause inflation. And of course, the tariffs need to be paid and often are being paid by the consumer, causing that inflation. And as a result of that, there is an expectation that there is less job growth under a Trump presidency. And also, of course, the focus on migration will have an impact. Just to give you a little bit of a feeling, in the previous Trump administration, there were already quite some tech companies that were worried about the H-1B visas that they often use to attract foreign tech talent. But also the focus on deportations could have an impact on industries in construction and leisure and hospitality that usually depend a lot on unauthorized or undocumented immigrants. And with labor scarcity already in those areas, that could have an effect on the labor market, of course, especially in those sectors. Moving on to the other topic, and like I said, I find this a very interesting debate that was started by Paul Graham. Paul Graham is one of the most well-known venture capitalists in Silicon Valley. He is, among other things, connected to Y Combinator, which is an incubator for a lot of startups. And one of the startups that originated from that is Airbnb. And the Airbnb founder, Brian Chesky, inspired Paul Graham to give a speech about founder mode and basically founder mode versus manager mode. And what does he mean with that? His point is that working with a lot of founders and working in venture capital for a very long time, he noticed that a lot of venture capitalists are focusing on or focusing with their founders on to say, hey, hire good people and let them do the work and be relatively hands-off. And that is the best way of scaling your business and scaling yourself. And while talking to Brian Chesky, he realized that it doesn't always work this way. And a lot of founders felt that they were distanced from the business, were not in control of the business anymore. And Brian Chesky said, well, I'd like to do things that don't really scale. I want to do that customer service call. I want to dive into a marketing campaign and be present myself. And I think it is an interesting new dynamic in the world of HR that probably has a larger impact. And of course, that didn't just start it here, but it is a sign of that. And that is that from leadership, there's often more expectation that it's not just being at viewing what's happening in the business from a helicopter, but often also zooming in. And a call out from my side to most people in HR is that in the past, a lot of people in HR were a little bit worried about working with data and would ask other people to work in the data and go look for the insights. But I think there's a lot of value also as HR professionals to really dive into the raw data and understand what's happening in your company, understand what's happening in the labor market, and then use that to your advantage when you're also working on a strategic project. One of the quotes that Brian Chesky said as a result coming from an interview on this topic was like, it's that great leadership is presence, not absence. So it means that you're hands-on, and this founder mode has resonated with a lot of people. And I think it's interesting to think about it from an enterprise company on how do you make sure that you have the right people that can do this, that can zoom in and out where needed, and can also talk to people in your business and go through the data themselves sometimes, and that it is also okay and allowed for people to do that in your organization. It could be a change in the bureaucracy in a lot of our organizations, that somebody is responsible for their area and then delegates the rest of it, but that there is a more coherent cooperation. Also, it can be focused on more adaptability of talent that you bring in, that they are able to do both the helicopter view, but also understand the details. Moving on to the next topic. For the fourth year in a row, we're doing our global in-demand skills research. And the reason why we're doing that is because we see a lot of companies are struggling to hire the exact same skills. And it's good to understand what are those skills, what are the different dynamics in different countries, and how can you use that to your advantage. And I wanted to share a couple of insights that we've seen from this year's data. First of all, we see that senior talent is significantly harder to hire. We saw that there has been a reduction in demand across the board for most countries and most skills. There are definitely some exceptions. So we see, for example, an increased demand in India. But you can also see that with senior talent, that reduction is a lot less, and that it's still very hard to find more experienced talent that you need as a company, that all enterprise companies need. The other dynamic that we see is that hybrid working seems to be a clear winner over remote. The offering of remote work has stabilized or reduced a little bit, whereas hybrid work seems to be becoming the default in most job ads. Another one, maybe not completely a surprise, but I think it's always a good trigger to realize on how do you organize yourself as a company, that there is a 8 times pay gap for the exact same skills across countries, if you compare, for example, North America with India, there is a quite a big difference. And of course, that is with a more globalized world and more globally connected teams, an opportunity to organize yourselves a little bit different, especially if you find it hard to find certain skills. Well, what can you expect from our in-demand, and how can it be useful for you? Of course, it's useful to understand what labor market dynamics are happening right now for those most in-demand skills, but also it can help you with the interactive dashboard that we'll be launching to underpin your decision-making on what is the right location for your skills to hire based on the data that we have available. Moving on to the next topic, and that is about a report that Lightcast launched about a month back. Well, first of all, I want to say it is an excellent report that if you need anybody to convince about the challenges that the demographics will bring in the US, but it is also a perfect example for other companies. It is beautifully visualized on how that does. And I've taken one of those visualizations here, and I'll talk you through it. And so first of all, what is important to realize is that the Bureau of Labor Statistics expects that the labor force in the US will grow with 6.4 million by 2023. And if you then look at who will be the people that will pick up that work, then a staggering 60% will be filled by people 65 years and older. So I'm going to repeat that because I find that an absolutely massive amount, that if you think about the new jobs being created, that the majority of that will be filled by people 65 years and older. And then you also see that there's only a small amount of people joining with, for example, not a degree. So there's more people joining the labor market with a degree than without a degree. And that you see a lot of challenges in sectors like construction, for example, where you don't need a degree. You can expect that there's going to be quite a few changes in the labor market and quite a few skill gaps. And I think as a company, you need to start thinking about, okay, if job growth mostly will come from people 65 years and older, then how are you going to handle that? It's probably good to review on, does your career page appeal to that kind of audience? Does your workspace allow that kind of audience? Can people of 4 or 5 different generations work together easily? But also, if people are retiring, do you have a way to stay connected with that kind of people and maybe move people from perm jobs to a more flexible or contingent type of work, to make sure that you keep them engaged, that you don't lose all the experience that they have around the organizations. And there are a lot of manufacturing companies at the moment now looking into how do we organize for that? How do we make sure that people that have knowledge of systems of maybe 10, 20 years back that are en masse retiring at the moment, how do we make sure that we keep access to that, and how do we also make them enjoyable for everybody there? I think this is one of those topics that everybody kind of knows about, but we're really seeing the impact now. And this Lightcast report is an excellent example of what that impact really visually looks like, and a couple of areas that you can focus on how to address that. Then a couple of takeaways from this session. So first of all, as I've discussed, the labor market has stabilized quite a bit, and with the rate cuts coming, will it tighten next? So the real takeaway there is, what will you do as a company to make sure that if it tightens, that you're ready for it? Do you have the recruitment organization in place to handle that? What happens if your attrition increases because of a tighter labor market? it's just, this is the moment to start thinking about that. Also, on the US elections, there will be changes, but don't overestimate that impact. There are policy differences that will have an impact, but it is not going to change from one day to the other. Talking about founder mode, how does that work in your company? And does your company culture allow leaders to also dive in deep and look into the details and do sometimes things that don't scale? Last but not least, as a company, are you ready to retain and attract the silver workforce, or the people above 65 years and older? And last but not least, please look out to the in-demand skills report that we'll be launching in the beginning of December, because I think there are a lot of valuable takeaways for everybody here. Then we'll move on to the Q&A, and I think there have been some questions. I see the first questions coming in. So first question is remote going to remain an option? So yes, if you look at what talent is requiring or talent is requesting, is flexibility. And one of those ways of flexibility is remote work. So especially if the labor market indeed tightens, I do expect that remote work will make a comeback. If you look at the headlines now, it doesn't really, it's not as popular as it was in the past. But I do think that as the dial goes back further in the area of talent, I do expect the companies will follow again. More questions. How can companies be attractive to an older generation? So yeah, for me, I think it's really good to do an exercise with your teams to go through and look at the lens of your hiring process. And is that a good experience for somebody that didn't grow up with only tech tools? So you do need to appeal in that way. Also, are your hiring managers ready to have that type of conversation with talent? And are they not just dismissing talent because of their age? And like I said as well, start thinking about contingent options for clients, or for that kind of talent, to retain them for a longer period of time. A lot of people do want to retire, but they don't want to fully retire. And if you cater to that, that's a huge opportunity to keep people engaged. Yeah, good question also from somebody from Germany. Do you have similar projections for the silver workforce appear for the European mainland? Especially somebody from Germany, I would say that this is a good one, because we know that this is even a bigger challenge in Germany than it is in North America. So to give you a little bit of an indication, the US labor force is expected to grow with about 3% over the next 10 to 15 years, basically. And the German workforce in a working age population is expected to decline with 10%. So there you can expect that even more, and that's why I think it's very relevant. Another question, will the levels of H1B going to remain as high as they currently are in the IT space? That is a difficult question. So I do think that the demand for companies will remain that high. You do see that if you look at demand of IT personnel over the last 2 years, it has declined more than average. It was a very tight labor market, and it has reduced a bit more. If you compare that to manufacturing jobs, they have been a lot more stable than tech jobs. But I don't expect that the tech job market is going to be easy anytime soon. And that does mean that a lot of US companies will want to attract foreign talent. But I do expect that if Trump wins the presidency, that all forms of migration will be reduced, and that that's going to be reviewed. Another question, delaying retirement seems like a winning strategy, avoid retaining costs and loss of institutional knowledge. Yes, absolutely agree. I think that's a huge opportunity. And I also expect governments to cater for that. So you don't see a lot of governments being active in this space yet, as in fully encouraging 65 years older and plus to remain active. But I do expect a lot more tax breaks coming for that type of talent, but also for companies to retain that type of talent. It may be also interesting in that regard, also to the previous question, the German government has announced that they have made a deal with India to attract potentially to 100,000 people from India to work in Germany. And so this is definitely a topic that's on a lot of governments' their minds to see how they can fill the skills gap in different ways. Migration will be one of that in a lot of countries, although that politically isn't always the most popular option. And of course, having people work longer is an opportunity there as well. And I think especially if you do that in a more positive way, not just increasing the retirement age, but seeing also from a positive light who wants to be engaged and in what forms can we organize that, that will be a very good way of doing that. I think I'm almost at the end of all the questions. If there's one more, I can handle probably one more. As inflation around the world seems to have cooled off, will this mean that the pressure to raise wages will also be less felt in organizations around the world? That's an interesting question. So you do expect that a little bit. I'm a little bit surprised by how real wage growth, wage growth minus inflation basically, is quite strong and continues to be quite strong. And I think that's a clear indication of a tight labor market and the bargaining power being with talent. We've seen in the US the port strikes and also the situation at Boeing, and especially in manufacturing, you see those wages increasing quite rapidly. And I don't think that this is the end of it yet. And that will mean for a lot of companies, especially in the manufacturing space, that their business models will be under pressure, or that you will have to raise prices, which and then might lead to further inflation, of course. So there is a little bit of a balancing act, but I do expect that there's going to be continued pressure on wages over the next few months. All right, then a couple of last parting words, a couple of events that I think are worth looking into to see if you want to attend, and also a couple of publications. In next week, of course, we have the US presidential elections, but the Thursday after that, the Fed is to expect to come out with another rate cut. Of course, the JOLTS is one that I watch, especially because the US is kind of leading in terms of what's happening in the labor market, and that translates to other parts of the world. And two publications from Randstad in this case that I think are worth looking out for. On the 13th of November, we have the Work Monitor Pulse Survey with a specific focus on equity and AI. So how is equity impacted by the use of AI? Does it open up more opportunities, and how do people perceive that? And like I said, our Global In-Demand Skills, which will be launched in the first week of December. Thank you, everybody, for attending, and I look forward to seeing you again on the 12th of December when we're doing our next session. Thank you very much.